Welcome to Harmony's full year representation for FY17. We had a milestone fatality-free quarter, the first time in Harmony's history in the June quarter. We've been for a very, very long time fatality-free, 157 days. We met our production guidance. It's the second consecutive year that we've done that. We secured our cash margins through hedging strategy. We had a 35% increase in headline earnings per share. We had a flexible balance sheet that allows for growth. We made good progress in our growth to 1.5 million ounces. Very importantly for South Africa and also for the mining industry is that we had a sustainable and inclusive solution to address the silicosis claims that we have in South Africa. A legacy that has been hanging over the South African mining industry for a long time. And we had a 70% year-on-year increase in dividend. We're paying a final dividend of 35 cents. We bring the total dividend for the year at 85 cents. Our hedging strategy secured our cash flow and our margins. 80% of our production profit is at spot price, making good profits. We actually have some of the best performing assets in South Africa, being Bambanani, the Phoenix that jumps, and even Joe in our organization that is really having very high grade operations. We have 9 underground operations and 1 open pit mine and multiple surface sources in South Africa, but we have got a significant presence in Papua New Guinea. We have a total of close to 37 million ounces of reserves. 44% of that is in South Africa. The rest of that is in Papua New Guinea, and significantly our copper part of Papua New Guinea is very big. We've got the South African operations now fairly steady at the 1 million ounce level. And in Hidden Valley acquisition, and that to us has been a very successful acquisitions to date. We've really exceeded every expectation we had of Hidden Valley so far, and that will deliver 180,000 ounces a year from FY19 onwards. And the balance we'll do through organic growth, exploration, and identifying and evaluating acquisitions.
Strategy and the approach of the South African operations is really built around this fixation to create an enabling environment. So it's all about getting back to basics, if you will, but making sure that each and every stope in the company, each and every development in the company is set up in order to produce consistent and predictable production. Strategy is really found on 4 pillars. Those pillars are safety and health, infrastructure management, grade management, and capital allocation. And as I said, what we're wanting to do is for those 4 pillars to deliver realistic, predictable production plans, which at the end of the day will stabilize the South African part of the business. On health and safety, safety campaigns really include a 4-layered risk management approach and incorporation of critical control management. On infrastructure management, happy to report that the efforts that we invested in order to improve the preventative maintenance on our large infrastructure has really yielded results. 36% improvement in unplanned stoppages is really what gives operations more momentum in order to secure better results. Grade management, this is really something that's a non-negotiable in Harmony. Grade is king, and we are really making sure that our managers are on top of managing the grade. In the graph here, this is what gives us confidence that the grade going forward is really attainable and achievable. It shows that our current development grades, this is the areas in which we are currently blasting, opening up future panels, is comfortably above our reserve grade, which gives us confidence that the grade going forward is really a grade profile that we'll be able to realize. Focused capital allocation and priorities. What I really want to talk about here is that we build cost and capital plans that fit the production plan, not the other way around. So it's really all about making sure that with a predictable and a realistic production plan that we still secure a margin in planning. The majority of the capital for next year is going to go into the operations, which will secure a good margin for Harmony going forward. SA forecast for financial year 18, let's give you some color in with regards to what production will look like in the year ahead. Grade from the 5.07, this is the underground recovered grade in South Africa. We're looking at increasing that again for the 6th consecutive year. Kilograms produced, there's an uplift in kilograms year on year going forward, and the all-in sustaining cost is the one that's really going to receive high level attention to make sure that we manage our cost going forward.
Our revenue increased with 5%, and the gold production and gold sales was very much the same. It was really that we achieved a better gold price thanks to the hedging we did during this period. Our production profit was 4.4 billion. Our taxation was positive 500 million. So our net profit was 360 million.